I'm here with Daniel Amir from DSP Group, which happened to be visiting Israel, and we thought we'll sit down and have a small chat about the important things of life, and nothing's more important in life than semiconductors, of course. Daniel, why don't you say a few words about yourself, then we'll
Sure, absolutely. So I head corporate development at DSP Group. I recently joined there. I'm based in San Francisco. Previously, I was in Wall Street for 16 years as a senior equity analyst covering semiconductors and hardware in firms like Ladenburg, Lazard, and JP Morgan.
Very, very cool. So first thing actually I want to touch on before we talk kind of high-level stuff. Yesterday was a big news item. ARM, which I think is one of the most important companies in the world of semiconductors, was acquired, I think, for $32 billion. Is that the number?
Yeah, absolutely.
Largest tech M&A, or one of the largest tech M&As ever, I think. Can you say something about it? Why is it valued so much?
Yeah, I mean, it was certainly surprising given that the purchaser was not necessarily another semiconductor company. It was SoftBank, so it was much more a financial conglomerate type of transaction. I think what you see here is that ARM is highly valued as essentially a sort of a monopoly in the IP, semiconductor IP world. Almost, the vast majority of chips in the world, if they're not Intel based, they need to use an ARM processor. And therefore, there's a tremendous market opportunity here. In terms of the value, I mean, that's in the eye of the purchaser. They paid a 50% premium. However, this is a very high margin business because it's an intellectual property business.
Software,
it's a very high margin, and there really are no other assets like that in the market. What I think is that SoftBank will probably just leave it alone and let it run on its own. I mean, I don't think they're going to get involved that much. It's just going to be another asset in their overall, portfolio as a conglomerate.
Yeah. I read somewhere that the big deal here is, again, this bet on IoT, which is something we can talk about because everything is IoT, and what exactly is IoT? But the idea is that there are going to be so many of these chip-enabled devices that are going to grow so fast, and so many of them are going to be based on ARM, which basically gives a huge growth opportunity for the company.
Right, because ARM's business model is essentially, they license their IP to a chip company that builds a chip, and they get, pennies for every unit sold. So in a way, billions of units, which is the target market of IoT, when people talk about the industry, is a huge potential from a revenue perspective for ARM. And that is by far probably the biggest market. The second biggest market for them today is largely the mobile phone market, smartphones, which is about a 2 billion unit market. And again, the vast majority of that market uses, ARM-based processors.
So a $32 billion exit in semiconductor, consolidation in semiconductors, overall we see these big deals happening in the past couple of years. For us as a VC, very little startups, right? We don't see semiconductor startups anymore. I mean, 15 years ago when I joined this industry, there were tons of them. Now, I don't know. What do you think that's ever going to come back?
Yeah, I mean, it's an interesting thing because the biggest challenge today is that in order to build a startup semiconductor company and to get to a level of a chip for production to get to revenues is still around $20 to $30 million. And the potential exit on chip companies from a multiple perspective, if you compare it to a software company where to get to revenues you can invest a fraction of that, and the multiples that you get on exits of software companies and internet companies are much bigger than chip companies, you have a situation where for the vast majority of venture capitalist firms, they've kind of went into much more the non-hardware area. But I do think that what you're starting to see is that you're starting to see some return in investment in hardware in general. If it's around wearables, if it's around VR, AR devices, drones, robotics. So you are starting to see venture investing come at hardware, what will be interesting to see is also will you start seeing venture investment coming back to semiconductors as well, and not just to the finished product.
Yeah. Two thoughts to bring to that. One, I think it's interesting because the VCs themselves, the general partners, historically 20 years ago, they came from the world of semiconductors, right? Vinod historically, before he went to, I think, joined Kleiner Perkins, he was a semiconductor guy. I think all the new generation of VCs are all from Facebook, from Google. These are not people that understand, are interested, or know semiconductors at all, which again is, I think, starts to make this cycle continue in that way, right? Because people don't have that experience.
I mean, I don't think that you're going to see a increase in semiconductor investments, I think, in the near term. I think it's very much plateauing, largely because also you're seeing a wave of consolidation happening in the public markets. And ARM is just, a continuation of a trend that's been going on for the past couple of years. It's also that you're seeing some of this trend actually move to Asia. So if you are a venture firm actually in Asia or China or Taiwan, there you actually do see semiconductor investments because the country, as strategic, wants to develop that industry. It's true that in the US, I think you have less of that, definitely. And you're right, from a skill set perspective, many of the venture partners today have much more of a skill set from the world of social media, internet, software.
Sure. For Israel, this is interesting because historically we had many of these semiconductor companies. I think still we have the best semiconductor talent in the world, right? Apple is building semiconductor or chips in Israel, Intel of course, and some others, and not many of these people go and build their own startup companies. I think a return to semiconductor is a good thing for Israel. The fact that it doesn't happen is sort of a mixed news, although at this point in life we have startups in all verticals, so maybe it's not that
bad. I think what you're seeing is that the talent that exists, and it's true in the Valley as well, the talent that you're seeing that used to be largely in semiconductors are moving to adjacent industries that can use their double E talent or whatever, like storage,
for sure,
like green tech, like battery technologies, and you're seeing that develop, that startup ecosystem. On the flip side, I think the larger companies, where they need the access to semiconductor talent, is what's happening is some of these bigger companies are moving semiconductor in-house, so they're becoming more vertically integrated. So Samsung, very vertically integrated company. Apple is becoming vertically integrated. Amazon, to some extent, is bringing hardware and chip inside. So some of this talent that used to be in startups are now working, you can argue, at the coolest companies in the world now, which are face out, are much more software, much more media, but they actually are doing hardware and chips as well.
Absolutely. And Google has been investing in that.
Right.
Yeah. Kind of to finish this, any other kind of key trends you see in the semiconductor market worth focusing on?
Yeah, what we're seeing, we're seeing like three big trends. One is we think there's a big trend towards voice. That's kind of the next, we think, user interface. We've seen text, we've seen touch, and now we think voice is kind of the next big user interface. Whether it's mobile, whether it's in the home like Amazon Echo, whether it's in the car. So we think that's going to be a big trend. IoT, definitely, it's a very amorphous. There's a lot of big picture things, but we think IoT is definitely, a big opportunity as well. And I think the other one, which is becoming now more and more active, is the automotive industry. So historically, automotive didn't go through changes for 20, 25 years. And today, there's a huge amount of investment, and a lot of it is semiconductors, basically. If it's autonomous driving, if it's safety, if it's sensors, if it's imaging, the cars of the future, a lot of it is semiconductors, and some very large companies are making very big investments in the space.
Absolutely. We at Carmel, like many other VCs, I think we've kind of stopped a little bit on the semiconductor investment, but recently we've done a big IoT investment last year, which was a company called Cibo, and we're taking a very deep look in the autonomous driving and the automotive business in general, and I agree with you, that world is going to change dramatically. Kind of side comment on that, when are we going to have autonomous driving mainstream? I've heard people say in 2 years. I actually think
Yeah.
maybe 20 years.
I still think it's 10 years plus. I think that you can have prototypes out there, but I don't think that the ecosystem is there yet for autonomous driving to really be on the road. I mean, so I think it's great on paper. I think that there's obviously a huge amount of advancements, but I still think we're probably still 10 years away.
Yeah, and probably 30 years away to implement technology to handle the temper and the quality of the Israeli driving.
For
right?
sure. Thanks.
Yeah, I think that's all. That's all we had. Daniel, thanks a lot. I
Yeah,
appreciate the time.
absolutely. Thanks a lot.
Okay.